Let's see here. I don't know if you guys normally do disclosures with your training. I haven't paid that much attention to it just yet, so I tossed this one together real fast.
It's a good one.
You guys able to see?
Yes, sir.
Awesome. All right. So I was asked to toss something together real quick on multiple time frame analysis and how I do it. So I thought I'd put this together, give a little bit of history on the topic, describe, the way it was originally intended, the modifications that I made to some of the math, and kind of walk you through how I use it. We'll start off with just a little bit of PowerPointery and then move into TradingView to kind of look at some charts and have some Q&A. How does that sound?
Sounds good to us.
So, multiple time frame analysis is basically just a top-down approach that was developed by Dr. Alexander Elder back in, depending on the source, you see 1985 or 86 associated with it. But he called it his triple screen trading system. And even though he says screens, he wasn't referring to displays. He was really just referring to using three different time frames to screen your trading with. Now, I personally use, depending on how you look at it, I use a screen and a half to two, or a display and a half to two, and I'll show you my screens. But first, a little background. To the best of our knowledge, everything that we do today is kind of sourced from some of this work that he did roughly 37 years ago. And the problem he was working on had to do with observations that he made using static time. Whether that was an hourly chart, a 30-minute chart, a 15-minute, or what have you. When he looked at momentum indicators, they were telling him different things. Sometimes you take a look at it and it's saying go long, and others telling you to go short. It was a bit confusing as to what you should do. And with many indicators, especially strength and momentum, different oscillators, you can get pretty conflicting messages. So he developed this triple screening system where he's got basically three time frames. He's got a strategic one that he looks at a bigger time frame, a tactical one that he would focus most of his time and attention to, and then an execution one to let him dial back and kind of, be more precise with that entry. And he actually recommended a multiple of five based off of this concept. In a given month, you've got roughly 4.5 weeks per month. You've got, 5 days a week, 5 or 6 useful trading hours in a day. And then if you divide that hour up, you've got roughly six 10-minute increments and five 2-minute increments inside of that. And so the crux of it is really based off of you should look at an absolute minimum of two time frames and ideally a minimum of three so that as you're trading, you can kind of see where you are in the bigger picture. Now, the three time frames is strategic. What he taught was that's the first one you really want to examine. You want to take a look at that one, study that chart, make sure that you know what's going on there. Are you seeing, double tops or whatever? Basically, where are you in the forest of things? Then you move down to, the middle screen, his tactical time frame. That's the one you're watching closely to identify the opportunity as it develops. And then the execution time frame is where you're paying, a, strict attention to those minute details and how can you really time that entry. An example would be if you've got an hourly chart up and you see a double top forming and the indicators look tired, like it might not break out. There's a possible short opportunity setting up there. You dial back and you look at the 10-minute chart now. It looks still strong and there's not a sign of weakness yet. You dial back again and look inside your 2-minute. You can see that it's diverging in strength and momentum, but you probably still need to wait for that 10-minute to weaken and then toggle back over to your 2-minute to to keep an eye on it, basically, you're kind of, glancing back and forth between those two. Now, the challenge that I had with this was I have some pretty good ADD, and my mind will not let me sit still for that period of time without just moving on to do some stupid things. And so I had to make some changes to it. And I trade the NQ almost exclusively, and 5 minute chart analysis just wasn't cutting it for me. I needed tighter control over price, and I really would like to have seen more signals. And so I dialed that 5x multiple back to 3. And I also wanted to have a system in place that let me capitalize on that day trader dream, right? Be in the market for a couple hours a day, and then I can hop out. So I needed to get good at trading those first 2 hours of the regular trading day, where spreads tend to be kind of tight, and you've got really consistent volume. So using this as an example, if you're using a 1 minute candle on that NQ to execute a 3 minute entry against a 9 or 10 minute trend, the challenge was I couldn't really time those entries well enough with that. If I needed a 1 to 2 ATR stop on a 1 or 3 minute move, you're looking at, 40 to 60 points sometime. And so I needed to shift my focus just a little bit left, and I settled on 3 minute trends with 1 minute signals and patterns, and I timed my entries off a 20-second chart. And so an example of that is anyone who's kind of watched me trade, I'll say something like, it looks like we may have a 3 minute bull flag forming here. MACD is still strong. Then I look at my middle chart, 1 minute. MACD momentum looks like a higher time frame pullback, meaning my higher time frame momentum is still good and strong. My intermediate, my middle time frame is showing a little bit of a pullback. The volume may not be pulling back as heavy as price retreats. So at this point, I start to draw those trend lines on that 1 minute chart. And then I'm studying the momentum and volume on my smallest time frame as we kind of approach those trend lines. And I'm looking for my indicators to agree, hey, it looks like we're going to break out of this, or for them to diverge. Hey, price is moving up towards that trend line. It's moving up towards a possible flag break, but momentum isn't great and volume's not great. So at that point, it might not be ready to break that flag just yet. Let's dial it back and wait. And this is actually what I see when I'm trading. This is my left and right chart. Um, yeah, it's my two monitor setup. I actually have a third monitor that I use for distractions. When I take a look at something and I say, I just need to stay out of this for the next 2 or 3 minutes, I've got a third monitor. I'll pull YouTube, Discord, whatever up to distract me for a few minutes so that I don't think I have to jump in and do something. But this is my right screen. This is my strategy screen. It's where I do my top-down analysis. If you look at the right, that right chart, this is the one that I can toggle down and look at my daily, my 4 hour, 2 hour, 30 minute, 9 minute, and 3. And especially in falling knives, you'll see me trying to figure out where is price headed to. That's where I break out these higher time frames and I look for, support and resistance there, because we're frequently, when you've got a falling knife on a smaller time frame, you just need to zoom out and look left and see, where's price likely headed, and see if you can find a way to, you're either going to stay out, or if that's far enough away, you want to try to find an entry with that so that you can trade that direction. But most of the time, I'm spending my time inside that 1 and 3 minute chart. This is my left screen. This is why, I say I've got about a screen and a half to two dedicated to multiple time frame stuff. I've got my smaller time frames here, and then I've got the rest of the active trading data. I've got my 5 second, my 20 second that I use inside of CHOP, where I'm looking for, 7, 10, maybe a 15-point move if it's still, kind of heavy in the open. I've got my account data. I can take a look at my P&L relative to targets, or where I am relative to drawdowns that I'm paying attention to during the day. Which accounts am I actively trading and at what ratios, and then, what are my open positions. The nice thing about that tab is if I don't like the ATM strategy that I've got applied, all I have to do is go into my charts. I can click the profit target or stop loss, kind of delete those orders, and then I can go right click on my leader account inside this account data, and I can apply a new ATM strategy to it there. And then I've just got my time in sales and my dome. My time in sales, I've got two different tabs. The first tab, I'm just watching everything, every single thing come through. So in those first roughly 10 to 15 minutes, that thing's just a blur. And so I've got a couple of highlighted colors so that I can see market orders coming through where people are buying above the ask and selling below the bid to kind of show some desperation happening there. And then, especially when I'm tracking big orders, trying to see if that thing just got chewed through or if it jumped out of the way, I'll toggle to that second tab that's got a filter on it where it just shows me, it basically just filters out all the ones and shows me every trade 2 lots or bigger. And then I've got my dome on the right where I'll toggle between, either micro or mini and look at those large orders that are sitting there. I use Rhythmic for my data feed. I get the extra market depth so I can see well past, plus or minus 10 from the current spread. Rhythmic will give you access to the entire order book and you can see, hundreds of points away. That's uh, that's it in a nutshell. I included a couple of links here for anyone that wants to go off and really, dig into that system a little bit and figure out how they might want to modify it for themselves. But I figured from there we can just hop into some charts and have some Q&A and kind of talk through it. Anyone have any
Sounds
questions
good.
right now?
I think you're good right now.
All right. So this is just the end of the day Friday. You take a look at, I don't have access to second-based data in TradingView, and so this is my 1, 3, and 9. I take a look at the 9-minute chart. I can see, based on trend lines, we're in a downtrend. It hasn't really crossed over yet, but I do have a bottom that was established. I've got a possible double bottom that was forming here on better strength, on roughly equal volume but better momentum. So if I'm looking at this wondering, hey, is this double bottom going to play out? It's time for me to start looking in my left two charts to see what's going on. And so the 3-minute chart's the one you would be trading off of in this case, since it's your middle time frame. So the way that that system works is you just kind of draw your trend line on, you're waiting for price to get down here, and as price approaches that bottom down here for this second bottom, you're basically just doing your evaluation at this point. And I like to basically say when price reaches this point, let me look left and see how everything behaved. And I'm real big on volume. So if I take a look at price right there, the first time we reached down here, on balance volume was way down here. And then when we reached it again, there was less selling that drove us down to this price than there was over here. So there's less sellers active at this price than there was the last time we were here. I now like that for a low, and I've got a couple of options for entry. I can either enter off of evaluating a trend line break on my smallest time frame and try to get in as tight as I can. At that point, we're evaluating this point right here with a stop down here. Or I can wait for a 3-minute and come up. I really like my entries on the smaller time frames typically because they give me better risk to reward. I can get in with a pretty tight stop and I can look for it to go. And anyone who's watched me trade or kind of talk to me, they know that I like to enter with multiple lots and I scale out. Psychologically going in with, one, or let's just say, going in with any defined quantity all in, all out, just messes with my mind and gives me some serious FOMO. So what works real good for me is to enter in with somewhat of a tight stop, come out and get a scalper's profit, move my other one to break even. So at this point, I'm officially profitable on the trade. I've already taken profit. I've realized profit. And if it comes back and gets me, that's okay. Otherwise, I'm looking for it to make a move and hit a certain profit target. And that's where I'm a big fan of fibs. I'll take a look and draw fibs on for my scalp targets quite frequently. And draw fibs on here, we can see that the 50% was giving us our initial resistance. And so we'd be peeling off at the 61 or the 74. And if we look left, we can see that price had some resistance here, had some support here. So that's probably a really good place to look to peel off. Oops, it's a wrong hotkey for this. So what I'll frequently do is put some sort of a drawing on. I really like using rays for stuff like that. And that way, as price is advancing, I'm looking to either take my last position off when we get there or be down to my next to the last position so that I can leave one runner on and trail the flags up. When you see me get those really big moves, those trades that have, 100, 150, 200 points, this is this is what I really tried to do. I tried to identify that larger time frame pivot point. I tried to enter on a small time frame with a real good risk to return. I enter with multiple lots, typically in increments of 3 or more, so that I can take one off, let one run. And then that runner, I will trail flags. And so it'll come down, make support. Once it gets support in, I'll move the trail up. In this case, if we look at the left, if I enter down here, we move up. I took some off, left one on. It came down here, didn't make a new high. Since it didn't make a new high and close above this wick, you really shouldn't advance your trail just yet, or at least I don't. I like to see price close above the wicks. And so once this closes over here, my trail would be moved to here. We come down, we got this chop right there. Price is closing above, so now I advance my trail to here. We've got this chop, price is closing above, I advance my trail here. We hit that first profit target, and then I'm just trying to identify, you know, how far is that runner going to go? Price is running up, and this is where I've got a decision to make. At this point, I enter this trade way back here in the low 800s. Let's just call it 810. And we've now advanced price. Price is up here to 910. I'm 100 points up. Do I want to trail 1 minute candles since we're getting pretty aggressive right here? Do I want to trail 1 minute candles and let it come down and hit me, especially whenever you see chop like this happening? Or do you want to stay down? Because that's the difference between getting out at 915 versus getting out at 880. There were 30 more points of profit in that scenario. Another option would have been to come up here and watch this sign of weakness. We've got all of these wicks pushing price down here. It happens again right here. At that point, at the top of this consolidation here, you should know that that's, at least in the near term, from an intraday perspective, that's probably as good as it was going to get. I've recently started doing what Magnum's teaching. I've got a copy of the VIX up and running that I'm paying attention to, and I really like doing, a kind of a similar thing there. If I'm watching price inside a consolidation, I like to anchor, you know, support resistance trend lines on the VIX. And if you take a look, we've got this chop that's happening here. We've got this chop that's happening during the open. But when the VIX broke through right here and sold through, it did it in advance of price breaking. And so we can see all of the hedging taking place ahead of time. I've noticed quite a bit lately that that's a nice leading indicator. And then you can use your multiple time frame analysis inside this space to really gauge that entry so that you can get out on that push up. For anyone who's really curious about this crazy freaking set of indicators right here, I'll kind of walk you through what I've done. And it actually shows best on this chart. All I did here was I took a stochastics because the math on stochastics works very well. And I've got a bad tendency to really just zero in on one chart and not look at the other time frames. And so what I did was I took the stochastics indicator and I made it a multiple time frame indicator by overlaying it. So the purple is the current time frame stochastics, the blue is the next time frame up, and the yellow is the next time frame up for that. For example, if we take a look, and I like the way that I can do crosshair synchronization here because it lets us really show what's going on these charts on the right. If I come over here to where this blue is crossing over, if we look in the middle, that's also where the purple, the current time frame, is crossing over on the middle. The blue on my 1 minute chart lines up with the purple on the 3 minute chart. And the yellow on here lines up with the blue in the middle. And so all of these just kind of roll off to the right. The purple is the 1 minute time frame. The yellow is my 3 minute. The blue is my 9 minute. So if I get stuck looking at one chart, I can still see higher time frame trends on here. I can see that my yellow's up. I can see that my red's up. I really should just be looking for longs and paying attention to cycle pullbacks inside of stochastics for those scalp entries. But that's how I use multiple time frame analysis in a nutshell. Questions? Comments? Euler?
Thank you, Doyle.
Yeah, no problem.
Hey,
No problem.
Doyle,
Yeah.
how many accounts are you running at the same time on this?
Right now, I'm doing 12 with Apex plus a personal with NinjaTrader.
Wow, awesome,
Yeah,
awesome.
my strategy is I just harvest out of the uh, the Apex accounts and roll it over to NinjaTrader for either active day trading or TD Ameritrade for swing or investments.
And are you copying those trades across all of your accounts? Like how many
I
how many how many positions do you take per account?
I do. So um, I do. So when you see a trade happen on my screen, I'm executing that trade across all of my accounts. Now, they don't they don't execute perfectly with one another just because slippage actually happens. And if I see that, hey, one of my accounts is really getting laggy, my OCD kicks in, and I see that my balances aren't as close to one another as I'd like them to be. And so I may go into my copy trader and turn off, a handful of them and just trade the others to catch them up.
Nice.
Yeah, the smarter thing would be to just keep trading them all and then make bigger withdrawals out of the other accounts at the end of the month. But yeah, everyone's got their own demons. That one's one of mine.
No, it's impressive that you get 12. That's awesome, man. Good stuff. On
Appreciate it.
your trend line breaks, are you looking for a specific so let's say if something breaks on a 3 minute, are you looking for a specific pattern on your 1 minute? You're just looking at your divergences really.
That's a good question, and I know Magnum, for example, isn't really a big fan of Head and Shoulders, and I know another buddy of mine absolutely hates them, absolutely freaking hates them, and I love them. I trade them all the freaking time. And this is where I'll say that not all patterns are created equally, and so a Head and Shoulders is a great example. If you think about it, let me break out my let me break out my crayons on TradingView here. So here. And so if you think about it, what should happen is price goes up, down, you've got your third wave up, fourth wave down, and then you've got your fifth wave. Then Elliott wave teaches us 1, 2, 3, 4, 5, and then A, B, C happening. And I'll just double click here to end this drawing. And so this is a common 5-wave move up with a 3-wave corrective move. And if we take a look at what happened at the top, that's a head and shoulders that just happened on the top. Those are the head and shoulders that I really like to play. I like to see the head and shoulders at the end of a run up. And then I like to play both the D leg coming down, and then I like to play, because technically that's an ABCD pattern, and the profit target on that ABCD pattern is going to be it reverting back to its B point. And so you frequently see the 5-wave move, the ABCD, and then you get to play the D leg coming down, and then you get to play the break back up to the neckline. So I like to see my head and shoulders at the top of a move and the inverted head and shoulders at the bottom. And the question that you've just got to ask yourself when you're looking at those two patterns, for example, is those patterns are designed to be reversal patterns. And so you look at where that pattern is showing up relative to the rest of the price on the chart, and you just got to ask yourself, does it make sense for a reversal pattern to be here? And, if not, then it's probably not the right move. A head and shoulders at the bottom of a rundown has a lot lower probability of playing out than a head and shoulders at the end of a run up.
Good stuff. Thank you.
Yeah.
Makes sense.
So I spend a good bit of my trades are two different types of trades. One is I do a lot of harmonic patterns, and so I'm trading, M's, W's, and technically this ABCD is a harmonic pattern. Fib retracements work very well with it. So I trade a lot of M's, W's, ABCDs, and I do a lot of continuation momentum scalps. And so based on time of day, I'm looking for price to travel a certain distance with that scalp. So if it's in the open, I'm looking for the NQ to move anywhere from 20 to 30 points. So that's really what I'm gunning for on a scalp. Hey, I don't have a pattern in play. I don't exactly know where this is heading, but I know momentum is long. And so, I'll probably enter with 2, take one off at 15 points and hit the other one at, see if the other one, either hits 30 points or comes back to break even. And then as time goes on in the day and you see that volatility die down, I'll just dial back my scalp targets from 30 points to 20 to 15 to 10. And the smallest I'm looking for during the day tends to be 10. Sometimes I'll dial down to 7, but 7-point scalps start to get, kind of dicey from a risk and reward perspective. My opinion, anyways.
Doyle, with your trades, do you see yourself with like fixed risk reward, or does it change per trade? Like do you have like a 1-to-1, 2-to-1 set for every trade, or is it
That's a
like
good
trade dependent?
question. So when I enter, I always enter with a stop loss, and the stop loss tends to be 20 points out of the gate. And then I look at price action near where I am to determine where I'm really willing to let it go. If I entered late and I really have to pull that stop loss back further than where it is right now, like, I entered in the middle of this push up and my stop shouldn't be 20 points, it should be 40 points based on price action, I'm going to leave that stop right where it is. And if it takes me out and moves down to that lower low, I would rather re-enter down there with bigger size and better confirmation than to, push my stop all the way down there and have to, make up 40 points to break even again. But what I really like to do, especially on scalp entries, is enter and my stop tends to be the bottom of the current candle or the candle before. But I do like my stops based on some form of price action.
Would you consider your style a reversal or continuation, especially if you're going between time frames, right? Like you mentioned something about, something's happening in
Most
your middle time frame. What you're looking for is a continuation in the. I'm assuming it's a reversal that you're looking for in a smaller time frame.
most of my trades are, um, if you look at it at, especially like a 3 or a 10 minute, it would be a continuation entry, but it might be a reversal entry on my 22nd and 1 minute because I was playing that pullback on a higher time frame. But what I found is most of my profit didn't actually come from big reversion trades. What I found was me trying to catch the top or catch the bottom tended to eat up so much freaking profit that that big move just wasn't worth it. Yeah, they're fantastic when you get them, but you may bleed to death getting it. And so I really try to do continuation trades. If you look at like wave analysis in general, on a 5 wave move, your third wave is statistically your best move to get in. So my ideal trade is that third leg. And whether I read the time right and I get in on a nice leg three for a run up, or I read it wrong and I'm getting leg three of a pullback, either way, it tends to at least get me back to that pivot point there or 127% of it. That tends to be my either my early or my mid profit target on those is I want to peel some off at 100 and 127% and then see where it can go from there.
You figure out how to identify wave three, let me know, man.
What was that? Figured out how to identify what?
If you figured out how to identify wave three, let me know, please.
I do a lot of trying to find wave three. And what tends to happen when I get those big runners is that's what I found. I found wave three. And so I got 150 points out of it. Um, you tend to not know that that's wave three until you get up here near the top and you start to see what I just kind of call, wave four momentum, where you're starting to see divergence in your MACD. And maybe whenever it comes down here to form this point number four, your MACD is officially made a lower low than it made over here. That's my good confirmation that, hey, third wave's over and let's look for let's look for either exhaustion or consolidation to happen at a new high here. But I've got a lot of trades of me just getting to like right there. Because, it can be a tough guess. You may think that you're in wave three, but you're looking at a 1 minute and you dial back and you look at a 5 minute and you just went long on wave five on a 5 minute or a 15-minute chart. But I do like the challenge of it. That's one of the reasons I actively trade is I do like the challenge. And me and a couple of other guys actually spent a good bit of time studying how do you find roughly where that bottom is and then get confirmation for, it's so much healthier to not catch the bottom, but rather catch that pullback, that bounce. My two favorite time frames for that to watch are my 1 and 3 minute. I'm waiting for the 3 minute to diverge and show some strength, and then my 1 minute will pull back again. Find an example of that happening. So right here, for example, you see this flag break that happened on the 1 minute? 1 minute and 3 minute?
Yep.
Yeah, if we take a look at where that flag was happening here on the 3, we can see that the MACD kind of dipped down a little bit, but never crossed over. But over here on the 1 minute, the MACD it actually kind of fell and crossed over. And so that's one of the setups that I look for from a momentum pullback perspective is, did momentum just get weak on the small time frame to show us a pullback on a higher time frame? That's a good way to try to find your wave 3, is using those two time frames side by side.
Looks like you got a 5-wave move from that bottom of the day, and then ABC.
Yep.
And then you ran up to wave 3, and then that's a leg 4, and then you finished off leg 5 there.
And then finished out the end of the day way up there, right? Yeah. And it's kind of weird. You know, you see that inverted head and shoulders happening with that head as a double bottom. And that actually gave, you know, gave kind of close to, it actually looks pretty decent. When I'm looking for a head and shoulders, one of the things that I'm looking for from a momentum perspective is, let's see, Alt, where have all the head and shoulders gone? It's probably one on a 1 minute. Toggle over to the 1. What you'll see on the 1 minute, I'll consider this kind of, oh, there we go. There's one. So we've got the left shoulder that formed right there, and we've got the head, and we've got the right shoulder. So if we come down here and we look at momentum, we basically saw momentum kind of peaked out with the left shoulder. And then when the head formed on even lower momentum. And then when the right shoulder formed, the right shoulder formed on even worse momentum. And it happened with a pull up at a point in time where price was kind of a little tired with some highs that it's been testing before. So the momentum associated with that was a good play. And my goal is to try to get in near the top of that right shoulder. And the way that I just play those are, I messed up and hit the wrong hotkey. The way that I play those are to just draw a trend line. For the trend line break. And I want to try to get in advance of that trend line break. So I want to get in somewhere around in here. Gives me a nice risk to reward because my stop is either the top of that candle or the top of the head. And then I'm looking for a minimum of, I play it a little bit differently than most people who are taught head and shoulders. I don't look for 200%. It hardly ever gets there consistently, but it very consistently gets to 150%. So I take a scalper's profit at 100%. When it gets to the neckline, move my price to break even. And then I take some off at 127. And then I'll take another one off at 150. And at that point, I'm done with that head and shoulders, and I'm evaluating whether or not it's going to break back up and hit the neckline again. And so in this case, I
Giving
would
away
be
all the
flat down here, and it didn't give a chance to come back up and hit it. What was that?
I was just teasing. So you're giving away all the secrets.
Oh, small group, private posting.
Just a joke. Just kidding.
See here. Sunshine just hit me a message. Oh, my journey in day trading and how many years before it became profitable. So my journey was kind of interesting. I was uh, I was an IT exec, and I thought I wanted to be CIO of a global Fortune 500 company. I spent about a little over 20 years headed down that path. And so I actually found myself working um, for an aerospace and defense company in the Midwest. I reported to the CIO. I was written into the succession plan. And as I looked at my peer group, one had an active job offer for a COO somewhere else. Two were ready to retire, and the third one was interviewing to leave the company. All I had to do was sit in the chair and wait. And at that point, they started transitioning a lot of the role to me. And that's when I realized I absolutely hate my freaking job. So not only was I climbing the wrong freaking corporate ladder, but my ladder was leaned up against the wrong building. And I stepped back and said, what else can I do to make this kind of money, but ideally without having to live this kind of life? And I looked at a handful of different things that just didn't pan out. But one thing I kept coming back to was how much I enjoyed trading and the analysis associated with it. And so, I started trading, I could swing trade stocks. The problem was, yeah, I'm making, anywhere from 20 to 45%, but that's not replacing corporate executive pay. It's not going to let me live the same lifestyle just because, the slush fund I was trading wasn't that big. Um, so I started looking at day trading. I lost real money a couple of times before I moved into SEM, and basically settled on this notion that if I can't trade paper well, then I've got no business trading real money. And so I transitioned from paper to real money and found myself continuing to be reckless with that. And then and then one day I just sat down. I was about a year into it, to be honest, when I sat back and said, look, you've gone through a couple of career changes before. And when you've made these monumental shifts in your life, they all had one thing in common, and that was there was no plan B. This will either work or it won't, and you're living out of a freaking Frigidaire box. And so, how can you give it that type of attention and detail? And I started to trade that serious. This is no longer me taking disposable income and putting it in the market to play with. This is my livelihood. There is no plan B. And I just adopted that mental mindset. When I did that, that's when I started to see things in the market that I hadn't seen before. And that's where I started really working on, same thing I'm working on to this day still. And that's, how do I better improve my discipline? I set a goal for myself that whenever I make in a month 2x, no, when I can make in a month what I make in a year loaded with benefits, that's when I resign. It's a big freaking audacious goal, because I only trade the first couple hours a day, and then I toggle over and actually work on other stuff. And so the question is, how can you pull out almost, roughly 200 grand working 2 hours a day in a month? Um, that number has eluded me. I feel like I've been about 3 or 4 months away from it for about the last year and a half. Um, but it's starting to click. I'm starting to get past that mental barrier that I had before that was, you know, I would get up to roughly half that number and then sabotage the rest of the freaking month and spend most of my time making that back. And so I basically dialed back my size, dialed back my activity a little bit, and said, all right, so how can you make 50 grand a month consistently? How can you make 75 a month? I'm starting to push that, that 100 to 125 mark. And when you get there, the number just starts to scale really, really fast. I'm just trying to keep that out of my head and just keep doing the same thing. And that's one of the things that really drew me towards futures is how much leverage and how much liquidity you've got there. There aren't many other things that you can trade. And yeah, you can YOLO penny stocks and get lucky. But when you're dealing with futures, you get to take the time to actually learn the heartbeat, the pulse of that specific instrument. And you start to really notice things like, exactly how price behaves with the MACD on this instrument. Because as you toggle from stock A to B to C to D, those little nuances start to get lost. So that's one of the reasons I focused on futures. If he's got any other questions, he can ping me and I can dial into them a little bit more. You guys have
All right,
anything else?
let me ask you one question. Like, based on your trading experience, now, if I took a random sample of your 100 trades, where do you find yourself in the profit factor block? Like, where do you think that
About
number
one,
would be?
it's about 1.5 to 1.8.
Okay.
Not huge. About 1.5 to 1.8. My average winning trade is a little bit larger than my average losing trade. But when you look at my biggest winner and my biggest loser tends to not be much bigger than my average winning trade.
Right.
But my average winner tends to be significantly larger than my biggest loser. I'll never have a 150 point loser. It's just
Hmm.
not going to happen. I've got a hard stop between 20 to 30 points depending on price action, and my average profit target's going to be about 30 points. So that right there out of the gate just kind of pushes me pretty close to a 1-to-1. But as I start to get those runners and I'm getting, 30 points here, I'm getting 50 points here, getting 75 points there, yeah, I've got multiple on, so that minus 20 points is really minus 40.
Right.
But when you factor in those 150 point runners and that I get, typically in any given week, I get two or three of those at least. Um, yeah, my my ratio is about 1.5 to 1.8.
Nice. Thank you. And that would be like, so on a large sample, uh, like removing both extreme endpoints, like you would think on a large sample, you would be right around the 1.5 to 1.8 profit
Yeah,
factor.
yeah.
Okay.
Is that because Doyle you'll take more break evens as
Oh,
opposed to right?
I have no problem taking break evens, right? You'll frequently see me enter with either two or three. And then at roughly 10 or 15 points, depending on what's going down right now, at 10 or 15 points, I'll take one off and move to break even. And so, given that I entered with two with a 20-point stop, I risked 40 points. I took one off at, let's say 15. And so I did risk more than the initial reward since I scaled out early, but I will have a lot of break evens.
Like, what percentage would you think the break evens are in those equations?
It's actually a pretty decent percent.
Okay.
Yeah, it's a pretty decent percent, and that's one of the reasons that I started scaling out.
I see.
And, hey, I can look at price right now and I know I'm going to get at least 10 points out of this. So let me enter two, take off one at 10, move the other one to break even, and oh, it got hit. Let me do it again. Let me do it again. Let me do it again. Okay, I finally got that runner.
Right, right.
That tends to be whenever I'm watching price at those double bottoms, at those real extremes where I'm trying to catch the end versus, a leg three pullback. I might have that happen several times. And the rule that I try to follow is if I just get outright stopped out three times, I got to take a break. I'm in the wrong mindset. I'm looking at the wrong, price on the chart. My level is wrong. Something's not right if I just get stopped three times. But if I'm peeling off profit or hitting break even, I don't count that against myself.
Okay.
I'm okay. I'm okay getting 10 points on one and a scratch on another to try to get you know, typically on the low side when you're looking at those types of pivots on a 3-minute chart, typically on the low side, you're expecting at least 40 to 50 points.
I see.
Because if you draw fibs on that move, you're going to get typically, once you find your bottom, you're going to get a 38 to 50% retracement.
Right.
Somebody here was talking over a little bit while you were saying about your monthly goals. Did I hear you say it right? You're at the point of reaching 50K or 100K a month.
Yeah, I got stuck at that
Nice.
70 number for roughly 6 or 7 months straight, and it really started to tick me off. I mean, it really started to get to me. Um, but I've just been focusing on, taking smaller losses, letting winners run. And I went ahead and at that point scaled out from trading 8 accounts to 12. Let me just keep doing the same thing I'm doing, but a little bit more of it. And let me spread that out across more accounts. And so I just started playing with that notion. And that's kind of upped the ante a bit.
Yeah, that makes
Yeah, one
sense.
thing I've
It's exponential growth at that point. Yeah.
yeah, one thing I've noticed is I can pretty consistently get 150 a day, 1500 per micro. I can very consistently get that. Um, I can routinely get 250 to 300. When I start pushing above that, I start over trading, I start over leveraging, I start revenge trading. I really have to pay attention to that. So I've really tried to focus in on, hey, you've breached that 200 mark, you've breached that 300 mark. All right, you're officially above 300 per micro or 3,000 per mini. You've officially beaten your average edge. Stop being so risky at this point. Get very aggressive on managing. So where a lot of people, once they've kind of, upped their, they've increased their purse for the day, they give themselves permission to increase size and trade bigger and maybe take riskier trades. Whenever I've gotten up to that higher point, I realize that I've already pushed my edge for the day. And so I actually do the opposite. I either just outright stop trading or I dial back size, toggle off accounts, only trade, fewer accounts versus copy trading all. Um, or I just, trim back and just do, one lot entries instead of three.
And the majority of your trading, Doyle, is with micros, correct?
Yeah, majority of it is with micros. Granted, a micro across 12 accounts is a mini, but yeah. And one thing I like about micros after hours is micros after hours tend to have better spreads than minis. I see frequently the minis may be, you know, 4 to 6 tick spread inside of them, where the micro may only be, 1 or 2. And so if you just take that micro and set it to, let's say if you wanted to trade a mini in size, and you just set that order entry to 3 and you just go 3, 3, 3, you didn't have as much slippage as you would have just trading one mini.
And Doyle, like on average trade, like once again, if we took a large sample, what kind of size are we looking at in like as far as MNQs, like per trade? Are you looking like 3 MNQs, 6 MNQs, 10 MNQs, 20 MNQs? Like what do you?
Most of my trades, I'm doing just 3 because I'm doing a lot of continuation and momentum. I'll say, at kind of average probability, and I'm not expecting them to be big runners.
I see.
Now, if I've got something teed up that I think is gonna, hey, I'm looking at this move and the stars are lining up pretty good, the B point's 75 or 80 points, or the 50% or the B point's 75, 80 points away, I'm probably going to enter a little bit bigger on that one. And I'm going to scale out, roughly every 10 points this thing moves. And so I'll take some off at 10 points, I'll take some off at 20, I'll take some off at 30, and I'm looking at fibs and I'm just, scaling out size and realizing profit. And then, once it gets to, that ideal spot, then I'll tend to just be down to 1 micro. That's one of the reasons I like micros is I can kind of load up the truck and not really be over risked, over leveraged. And at the
Yeah.
same time, I can scale out pretty I can scale out pretty well with those. I would rather enter 9 micros. If I could only trade one mini, I would rather trade 9 micros so that I can just peel a third off, and then leave a third to see if it hits or not, versus having to go all in and then all out.
I see.
I might feel differently if my, trades were all sniper trades and I could, just sit back and trade, 2 or 3 times a week and just load the truck up on those 2 or 3 trades. But I'm not there yet. VIX is helping me a good bit on those. I gotta say, when that 3-minute VIX starts to do trendline breaks, um, and they're lining up with price action on the NQ, those trades tend to turn out pretty decent. I've never thought about trading the VIX and just using the index as the instrument I'm actually trading the VIX off of. First time I
Black
heard that being
magic
spoken about, I'm like, what the
man.
crap is? First time I heard that, I'm like, what the crap is this voodoo?
Yeah, we got the father of that religion in here.
Then I started playing with it. I think I played with it for probably about 2 weeks before I actually started trading off of it. I'm like, holy crap, this this works more often than it doesn't. This is a pretty good filter.
And I'll give you guys a heads up on some news that I got this week. John Bollinger emailed me and said that every platform's default will now be 15 count with 2.21 standard deviation as the default set. So um, thanks, Jittery. I was hearing crickets, man. I was like, that punchline didn't work.
Magnum's laughing back there.
You know,
That's
he
his
is.
Bollinger settings, 2.5.
Yes, he has sold those rights to just about every human that I know of so far. So.
That's one thing I haven't done. I haven't put Bollingers on. And that's mostly because I adopted this mindset about a year ago that, there's this statistician, it's one of my favorite quotes. His name is George Box, and he said that he's talking about statistical and scientific models. He says that all models are wrong, but some models are useful.
Mm.
And that's the theory I've adopted with indicators. All indicators are wrong, but sometimes they're useful. And so if you take the time to stop moving from indicator to indicator to indicator, and you just standardize on one, and then you study it and learn how price responds to that one, then you can move on to another one. But give yourself time with that one indicator to learn how it correlates with price.
Makes sense.
And, I started off with Bollinger Bands way back in the day, never gave it that kind of time, and and have just settled in on the indicators I've got now, and I can't bring myself to add Bollinger Bands to my charts. Like I've got two moving averages that do everything I need them to do now because I've learned largely everything I need to know with those two moving averages.
Stuff.
Strangely enough, the freaking 20
Hey Doyle,
EMA and the 50 SMA.
those are good moving averages to have. One last question regarding Apex. You had an issue with drawing from them that you trouble with having to count.
Jitter, you're breaking up. Doyle, can you understand him?
I couldn't understand him.
Okay. Try it one more time, Jitter.
Dropped. Maybe he's gonna rejoin and have a better connection
he'll
with
come.
us.
He'll come back.
Can you hear me now?
Oh, much better.
Okay, all right. Have you had this question kind of goes regarding the Apex prop firm itself. Have you had any issues with them having multiple
I,
accounts?
so I've had one issue, and it actually turned into be a pretty big issue that has nothing to do with Apex, to be honest. It has to do with Rhythmic. I bumped myself up to 15 accounts with them, and with the way that I enter and the way that I scale out of trades, the Rhythmic Plant Guardian has got these abstract rules that they don't publish, but they enforce. And so I got this nasty message saying that I've had more than 50,000 order modifications since the last reset. And if I continue this high frequency trading, they're going to deactivate my account. That's the only,
Well, I got something similar to that as well. Like
yeah,
they were
that's
telling
the
me I was
problem that I've had.
500 modifications in under a second, and I was thinking like, what the hell are they doing? Like how many messages are they getting that my because I only have 6 Apex accounts tied to it, but they were like that you're transacting more than 500 modifications per second, and I said, how is that even like possible?
Well,
You know,
so
so.
so here's how their order system works. If you place an order with a profit target and a stop defined, that's three orders that happen out of the gate, and then that's three orders for every account that you trade.
Mhm.
And so that's just let's say it's 10 accounts, 3 times 10, that's 30 for just hitting. In my case, I've set up hotkeys. Control up is my long. And so I hit control up, there's 30 entries. One thing I used to really like to do is instead of having to toggle my order quantity, I would just go up, up, up. And I would hit it real fast and I would get 3 entries really close in price. Well, that would be 30, 60, 90 orders placed in about 1.5 seconds.
I see.
And so they started balking about that. And so then I modified my trading style to, you know what, let me just enter with 3 and then quickly toggle that down to 1 and scale out. And now if you watch me trade, you'll see that very frequently I don't have my profit target defined anymore. Because if I enter with 3, and so I enter 3 lots, that's 3 orders: the entry, the profit target, the stop. And then I scale one out for profit. That's a fourth order. And then there's a modification to the order quantity on the profit target and a modification to the order quantity on the stop loss. And then I move the stop loss to break even. And so now just entering and then exiting 1/3 of my position is 7 trades across 10 accounts.
Nice.
And then if I scale out a second time, that's another exit, and then two more order modifications for the profit target and the stop loss. And so now I'm up to 9, which would be 90 orders placed with Rhythmic. And then the profit target gets hit for 10, and then the stop loss gets canceled, and that's 11. So that one trade
Nice.
is 11 orders times every account that you have. And so I stopped setting profit targets to decrease the order modifications that I have.
That makes sense.
And so now I'll either, manually exit the position or just right click the chart and put an order on the chart there for it once price gets near that, versus having, a lot of order modifications happening. That's the only problem. That's the only problem I've had. I mean, my trading style, I'm not YOLOing it. I'm not, buying one account, selling another, wiping out one so that another can hit the target. I'm not playing with weird math to win in fund accounts. And so I think that's the one thing he seems to complain about is, from a math perspective, if you go after 4, if you take advantage of his 80% off sale and you get 4 of his $25,000 accounts, you can basically go long on one, short on another. One of those will get funded. And then you go long on one, short on the other. One of those will get funded. And so now you're funded on 2 accounts. They get funded. And then you go long on one, short on the other of your funded account, and you've now beat the trail on 1/4 of the accounts that you have.
And then when you're left with one, what do you do then? What's your game plan?
That seems to be
YOLO
what
again,
people.
baby.
That seems to be what his latest video has suggested, is that people are YOLOing. They're doing a news event, placing a bracket order by having, long one account, short another account on the side of a news event. And that news event is wrecking one account and then, getting, a metric butt ton of money in the other account. And what's he calling them? He's calling those windfall trades. And so that's his one complaint that I've seen is, he's not going to honor windfall trades. If you have a windfall trade, you need to be able to go back through your trade log and show him where you've done this before, right, and prove that this is part of your viable trading strategy.
Makes sense.
I mean, I look at me trading news and, yeah, I can have a 30 to 100 point runner trading news, but I also have those just, in the middle of the day on a Wednesday.
Yeah, I mean, I think their systems will pick up and eventually will put some kind of, like you're saying, like a marker in there where like 4 becomes 2, 2 becomes 1, and 1 gets paid out, and you just rinse and repeat, keep doing that. Like that model will eventually get wiped out. But because I've heard guys complain like the fact that like I don't want to pay $95 a month for each account to hold on to the subscription. Like my question to them is like, how much do you plan to make per month?
Right.
Like for me, like I'm thinking like if you can't make $95 like in a day or two to cover the cost of that account, like what's the end game here? Like if you're complaining about a monthly subscription, like
let me pull up a calculator, and here's the math that I run, right? My favorite one of theirs is their 50K account.
That's one I have too.
Yeah, that 50K account will let you go up to 10 minis. And so let's say you don't max out your withdrawals. Let's say you give yourself a cushion, and then you're trading, on average, you're trading 2 minis, right? Sometimes more, sometimes less, but you're trading roughly 2 minis at roughly $1,500 of profit a day, at 15 on the low side, 15 trading days a month. That's $45,000 minus your $95 data fee. I mean, dude.
Doyle, the guy that's complaining, the guy that's not complaining about $95 is not making $95 a month, much less 45 grand a month.
He's not dreaming big enough. That's what his problem is.
No.
You sit there, and even on the low side, right? Let's say you're slinging micros, right? And you're being conservative. You're trading one or two micros, pulling in 150 bucks a day at 15 days, minus your 95, right?
Yep.
And so just being
Yep.
conservative is slinging one to two micros at 150 a day. After trading your fee, that's 95. That's 95 bucks.
Yeah.
So what is
Yep.
that? 95, 2250. So 95 divided by 2250. And that's a 4% overhead.
Yeah.
That's freaking 4%.
That's not too shabby with zero risk attached. That's
Right?
not.
That is not that is not shabby at all. 4%. Come on. 4% cost of doing business. 4% in
Like I
fees.
think
Whatever.
if you're complaining about the 95, I think you got to complain about your strategy more than
Yep.
the
I
$95.
I I agree. And that's where I think part of the challenge is, I know people that are scalping machines, and yeah, they can go out there and very consistently get, 3 to 7 ticks. The challenge is when you're doing that with micros, and then the other challenge is you don't actually have an 85 or 90% win rate.
Yeah. Yep.
And and yeah, then you're going to start complaining about 95 bucks a month because you actually weren't profitable anyways. So,
Yeah.
I take a look at it and I say, yeah, it's 95 bucks a month. But when you compare that against a $40,000 a month account, come on.
Yeah. Yeah. Like, yeah, my advice to anyone is like if you don't have a good, sound, successful strategy, like you don't need 6, 7, 8, 10 accounts. You just like that's right now is the least of your worries, I think.
It is, right? I mean, the first things first, um, SimTrade. I mean, even if you pick up one of his accounts just to get access to real-time data to SimTrade, right? SimTrade. If you can't be profitable sim trading, don't blow up the prop, right? And if you're gonna
Yeah.
blow up the prop, wait until the last of the month so that you have access to it all freaking month. And he'll
Yeah.
give you a free reset at the end of the month. And so take advantage of it to get the sim. It's actually a low cost way to get access to a really good platform and pretty darn decent data, in my opinion. Um, so there's that. And then there's no point in going after multiple prop accounts until you can actually get one and keep it, because otherwise
Yeah.
you're just magnifying your losses, right?
Yeah. And on the trade copier you're using, is it Replicanto or is it like another built-in trade
I'm
copier?
using the I'm using the Apex Trade Copier.
Apex
It's
trade
about
copier. Okay.
half the cost of Replicano, but it's limited to just your local machine.
I
And
see.
so
Okay.
where Replicano, one thing I've looked at with it is, I've debated, maybe going and getting a couple of accounts with Lilu and then loading up NinjaTrader and Replicano on, a second computer at home to copy trade over to Lilu.
I see.
To me, if you're going to trade multiple Rhythmic props, then you want to use Replicano versus the Apex Trade Copier. Because Apex Trade Copier it is Replicano with a licensed limitation to only trade your local machine.
I
Now,
see.
that said, Replicano will trade one NinjaTrader brokerage plus the NinjaTrader. It'll trade your NinjaTrader CQG data feed plus one Rhythmic firm, and you can do that with just a single broker lifetime NinjaTrader license. You don't have to get the multi-broker. You can trade a
Let me ask you a
prop
question.
plus NinjaTrader.
The Apex trade copier, like if you don't mind me asking, like what's the cost on that per month?
It's a one-time fee of, gosh, I think it was 150 bucks.
Okay. You would know if we can use that in Quantower or not. Is that only for Ninja? Or
It's for Ninja. Yeah.
okay.
It's right at the top of my search list. Oh, yeah, that's the one. There.
That's a trade cover. Okay.
Yeah. Well. .com. You can get to it without having to log in. Yeah. That
Let's
trade
see, okay,
copier right
check.
there.
I was hoping we could use it in Quantower, but it looks like it's Ninja limited.
It is. It's Ninja limited. Yeah, that 75% discount, it's been in place for years. So $150 one time.
Nice, nice.
I thought Quant had a trade copier.
We're working on fixing it, but
Oh,
yeah,
okay. I
it's
thought I'd
in there.
heard
We're
that it
just
did.
we're working on it.
I mean, I've used this one to trade copy up to 20 accounts,
Nice.
but I couldn't keep from breaking the that max order rule. I was just always breaking it and was about to lose my freaking Rhythmic account trading that many accounts. Now, that Rhythmic deal is actually limited to per login, and that's one of the reasons I was thinking about a different broker or a different
Okay.
prop. Is I've got one Rhythmic ID with Apex, I would have a different Rhythmic ID with Lilu, a different one with Earn to Trade. And then I thought, you're just being greedy at this point.
Doyle,
Just,
Guinness Book of World Records gonna give you a call
oh
doing that
man.
stuff.
I've got a buddy who's actually he's actually got more than me. I think he's trading 18 now, and he's actually not using a trade copier. He
Oh my
basically
goodness.
has our Trader Pro with the windows resized so that you basically just have the buy sell flat buttons exposed,
Mhm.
and the guy's just being super fast on his mouse. Click, click, click. No. He's using a macro recorder that I told him about. So he basically has a macro that recorded him clicking buy on all of those buttons. And he'll basically tell the macro recorder to run, and over the next 2 seconds it has bought, across those 18 accounts.
So what you're saying is he's not using a machine, he is a machine.
He is a
I
machine.
see.
I traded that way for a little while, and then I got really annoyed at not being able to scale out of trades, because with that trade you're basically going all in and or all out.
Right.
It's hard to, you can't really do trade management. For example, hey, I want to enter with a profit target. I'm going to automatically enter at 30 points, and based on price action, I'm going to move it, up or down a certain amount. The problem that I was running into, I used to use multi-charts. I would have to, I had a chart per account that I was having to drag price around on. And some buddies of mine were using NinjaTrader and the trade copier, and I watched how easy it was with them, and I looked at this and I said, dude, it's $150.
Yeah, definitely worth it.
Yeah, it's $150. So I need to just stop the madness. And that's
If you
what I got
need
to
to
say to
tell your other,
anybody. And that's what I got to say to anybody complaining about the $95
Yeah.
is it's roughly on the low side. It's 4% of your revenue.
Yeah, I'm with you.
Were you saying something else, Jittery?
I was gonna say, if your buddy needs a new Discord name, I got that Jittery Fingers up for sale for him. Seems like he's doing better than I am, man.
Oh, it's hilarious. Somebody will run a sale and he'll just go get one. Yeah. I did that. I did that for a while, and it was all fun and games until I started getting those nasty emails from Rhythmic. You know, you get that first warning, you're like, okay, whatever. Maybe they rebooted their servers. And then you get the second email, and then you get the third one saying, this is your final warning. We will deactivate your account whether you're in a trade or not. And I'm like, well, I gotta I gotta dial this back. I mean, it'd be nice if they actually published that somewhere. Hey,
Yeah.
there's been 50,000 trades with it, or 50,000 order modifications since our last maintenance reboot. Okay, so when was your maintenance reboot, and how often are they? Are they are they daily? Are they every other day? Are they once a week, twice a week, once a month? You know,
Yeah.
because I
Yeah.
don't actually have a way I can count the number of orders executed and canceled. And so I can see that in RTrader. But modifications, there's no way to count modifications. And if the trade was modified, you can go through there and manually count. So if you like open up your order history, you can see that this order was modified. But was it modified once, twice, three times? You can't count it. There's no way in the tool to tell you how many orders and modifications you had. So I just sat down
Yeah.
one day and did the math and determined, you know what, this is probably why they say with the trade copier that they can copy up to 20 accounts, but they recommend no more than 10. Probably because once you get above 10, you start to upset Rhythmic.
Makes sense. Yeah, Rhythmic just wasn't. I don't think was ever designed with the idea of a trade copier.
You know what though? I mean, this is the business person in me. I'm looking at this going, Rhythmic needs to shut the hell up because they're getting a slice of every transaction.
Yeah, and Rhythmic is like their mentality is like we're getting a slice of every transaction, and we don't want to be modernize either. Like it
Yeah,
is what it
yep.
is. Like
Yeah, this whole prop industry standardized around their platform, and
yeah,
and they were
yeah,
not ready for what's happened
no,
over the last couple of years.
not at all.
They're getting there, but they weren't ready for it. And one thing I really do like this about Rhythmic is like with Bookmap, you get access to the entire order book.
Yeah,
And
yeah,
so my minute-based charts that I keep on my right screen, I have level 2 printed on the right side of my chart. And so I can basically see on my right side, I can see order depth happening there without having the typical Bookmap stuff on my
I see.
on my charts. Let me pull up my one of my charts that's got it on there. And this thing I've got Snagit so I can just roll through picture history. That one doesn't do it justice. Oh, that's funny. I'm actually having a hard time finding one that actually shows the goodness of it. I might just have to open Rhythmic up now that it's not open yet. Still another 30 minutes. Starting to notice a theme as I go through. I take a screenshot of trades that I that I've made that I like, and a lot of those doesn't have that data. That's one thing about this indicator is with with Rhythmic capturing hundreds of points of levels of data. Oh, Easy there, Bronco. There we go. So I've got this indicator that stacks all the level 2 data over on the side. And so I can see a big order sitting there.
I see.
And I can see it 100 points away
That's nice.
versus just plus or minus 10.
Right.
And so I can see that, sitting way off the dome for a lot of people. And when you see that it's parked way off the dome for a lot of people, the typical behavior is going to be price will get up there to it. And then when it gets near it, it's going to scare the crap out of price and there'll be an initial pullback. And so that initial move is scalpable. And then there tends to be a reversion back towards it. And that's what I really like to pay attention to, is what's happening as we get near that big price. And I'll, pay attention to my time in sales to see, hey, I might scalp towards it and try to get out right before it. But when we get there, does price shoot through, and does it actually buy its way through it, or did the seller jump out of the way? I like to see that in the dome. Helps me know the real strength of the buyers, because if they actually bought their way through it, they might get a little bit tired. That thing just jumped right out of the way. There's still buyer strength, and there's also still a big seller stalking somewhere. That on balance volume is probably my favorite one.
Yeah, I do. I mean, what you're doing with the DOMs, I do something similar, but I just do it with the OI book.
Oh, okay, yeah. Yeah, I've basically taken my on balance volume and I've applied moving averages to it, so that I can pay attention to, like right here. Price came down, made this low, but right here, where this flag is forming, I can see that on average, buyers are gaining control of price because my active OBV is above all 3 moving averages, and one of my 3 moving averages has now crossed above the other 2. So I can see that, not only do buyers have more control right now, but the average is also changing.
Good stuff.
That's one of the things that I'll try to look for, is volume agreeing with price movement that's happening right now. I've become a big fan of that. I'll do that and play with, the candle sizes, especially when looking for scalp entries and stuff, using what Anne was teaching in her volume price analysis book, where you look at the average length of a candle.
Mm-hmm.
And basically say, hey, that candle is 3 times the body size of the candles adjacent to it, but the volume does not justify the size of that candle. So there weren't really enough transactions there. It's not that the buyers showed up to the party, it's that the sellers left.
Right.
And so at that point, expect for them to show back up and push price down.
Makes sense.
Anything else?
I appreciate your time today, Doyle.
Yeah, no problem. Drop a note and let me know where I should park this video. I can either upload it to my YouTube and share the link with the server, or put it out on a share that you've got access to.
Yeah, Jones, we put it in resources. Where do we usually put the?
I think so. I think it's in resources.
Yeah, if you